Hi, everyone. We hope you've had a wonderful Thanksgiving. And it's hard to believe, but November is wrapping up. It's a great opportunity to look back on not just the last quarter, but also the last year. And if you've been getting it done with whatever it is you've been doing, congratulations. Be proud of it. And it was one hell of a year. Big turn down in February and March. All the COVID news, all the election news. And here we are, wrapping up, going into the final month. If you're not getting it done, feel free to give us a call. Feel free to check out our website. We're not a broker. We're not a financial advisor. We don't make specific recommendations to buy or sell anything. We're a place where like-minded folks that want to take advantage and be opportunistic traders in the market can come and take advantage of some, if not all, of the tools that we have made, and to try to demystify this part of their life for them. Let me be the first to say that nobody has a crystal ball. There is no Bible code to the markets. Markets move up and markets move down. Sometimes they move up and up and up, and sometimes they move down and down and down. And other times it's quickly up, quickly down, quickly up, quickly down. And it can be for the untrained eye, the untrained person, it can be very, very frustrating. It is a game of probabilities. It is a game of probabilities. There will be times that you will put on a trade and you will have put it on in the correct position, and the market will run and run and run, either up or down. And then you'll come in on other days or other weeks and you'll put the trade on and it'll stop you out. And it'll stop you out and it will stop you out. Hopefully it'll stop you out. For if you're not disciplined and don't understand that it's a game of probabilities, that first trade may be your maybe your greatest success, but it also could be the one trade that you have to fight the rest of your career, thinking that every trade is going to be like that. And rather than honoring a stop and honoring the probabilities, you wind up having the trade go against you, go against you, and go against you. And as another trader, not our quote, but it was another trader, it's a rather crass comment, but it is true. Eating like a bird, shitting like an elephant. It isn't good. It's okay to eat like a bird. You want to poop like a bird. You want them to be small. You want it to be consistent. You want it to be over time. And it can help with cash flow. And if you can continue to put yourself in a position to eat like a bird and poop like a bird in terms of profits, every once in a while, if you have the right tools, the right training, the right perspective, you'll actually get into a trade where it does run and run and run, and you get that big fat elephant. But not on every trade. That's the very nature of what it is we do. To the untrained person, they just think that every day in the market is the same, every week is the same, every market is the same, and there are markets within markets, like fishing a river. If you've ever done any fly fishing on a big, big river, you can't really fish the whole river. You have to be able to fish just pieces of it. This particular trade that you're looking at started for us on November 3rd. November 3rd was the day of the election. It started at 5 p.m. The election didn't end. In fact, the election still hasn't ended, but it didn't officially end until 8 o'clock that night. But yet the market went short on the VIX and went long all of these. Had you taken, and we reported on this to our members, and we actually made YouTube videos. If you go back and look at our YouTube chain of videos and put it in a high def, you'll see us having made that call. It hasn't changed. There was one little blip of the VIX, one little bogey that gave a little bit of a warning, and then it went away within about 24 to 36 hours, and the markets continued along. Had you taken one contract in each of these markets, a mini contract, you would be up $68,475 real time. When this trade went on, we said to everybody and our members, and even on the YouTube video, I have no idea how long the trade is going to be there. It may only make 5,000, 10,000, it might even lose. But it might be there for days and days and days and might run up tens of thousands of dollars, just as it has. And the truth of the matter is, I cannot tell you how much longer this trade is going to go. It might go for the month of December. It might go for the month of January. Then again, it might be over next week. How will we know? The VIX component will go long and the markets will go short. And when that trade comes on, we will not know how long that trade will last. We will not know if that trade is going to win or lose. Now we can go into our models, and I'm going to show you that in a moment, and we can look at the characteristics of these trades over the last 5, 10, 15, 20 years. We can go back and we can have an idea about how long on average historically these trades last and how much do they run up or run down. And that can give us some idea as to whether or not we're experiencing what we would call an outlier. We want positive outliers. We don't want negative outliers. By the way, had you taken this trade using micro contracts, you would be up $6,800 in just 5 trades. Now you say, well, anybody could do that once, bagger. Maybe it's just a moving average. And if the market's going up and up and up, then, anybody could have done that. Well, let me take you to the chart. Let me take you to the strategy itself, and let me show you what it's done over the past year. Okay, this is the chart, and by the way, we do have Bollingers on here, but the Bollingers are not part of the strategy. This strategy utilizes 3 separate data streams. Let me show you. I'm going to edit symbol. You see data number 1, it says ES. Data number 2, it says VX. See that? And data number 3, $TNX.X. That's the 10-year Treasury. This is over the range is over the last 2 years. If you want to see this over the last 5 years, 15 years, 20 years, you're welcome to call me and we can chat about it and I can show you. When it receives the 3 data streams, there is an algo. There is a strategy running that makes decisions to buy or sell. So let me show you what this strategy has done year to date. So let's come here. We're going to go to, hopefully, the periodical review. Let's do this on a annualized basis. And there you have it. If you had run one mini contract since January on the ES, there would have been a total of 31 trades. You would have won 54.84%, a profit factor of 4.47, or a total amount of $119,775 for the ES. Now, we also do this for the NQ. So let's do the same here. Let's look at the annual. Since January, 31 trades. This is for the NQ. You would have done $158,620. What about the YM? And here we are. 99,235. And then the Russell, which is actually the weakest performer of the four markets historically. Oh, I'm sorry, that's a monthly view. We want an annualized view. This is from January 1 of this year, 58,940. 58,940 on the Russell. And then the VIX itself, on an annualized basis, run rate, $25,950. Okay, so you would have done $462,520. Now we're going to update this video and put it on our website under the Nicklaus timing model. The last time we did this, which was about a month and a half, 2 months ago, it had done 400,000. So just in that time, Nicklaus has added an additional 62,000. Do I know what it's going to do next month? No. Do I know what it's going to do next year? No, I don't. But I do know what the model does. And so from that, I can derive some confidence and will continue to run the program until what or when it stops modeling or stops doing what the model says. That, folks, is trading with a strategy, trading with a model, and trading the probabilities. If you like this approach to the markets, feel free to give us a call, because the Nicklaus timing model is not the only thing we offer. We offer a ton of stuff. But in the end, you really do need to learn and understand how to trade. Because a good trader can take a mediocre strategy and can do pretty well with it. And an inexperienced, I'm not going to say a bad trader, but an inexperienced trader can take a trading strategy that is what we would call robust and destroy it. Namely, by trading on greed and fear, by trading on the money. I'm Bagadon. My phone number is 813-758-8263. You're welcome to give us a call. I'm happy to chat with you. We don't accept everybody, and not everybody is meant to be a trader. It is an uncertain endeavor. It's very uncertain. And if you don't like uncertainty, then trading probably isn't for you. I don't know many things in life right now that are very certain, but this is not an A plus B equals whatever endeavor. You've got to have some flexibility. Feel free to give us a call. Thanks.